Hey everyone, how's it going? We just got the closing bell for Thursday, October 24th. Now, for the most part, we just had a pretty choppy day, but what is significant is that we did not break that EMA 20. So, if you saw my Telegram earlier today, we talked about how if we could hold above that EMA 20, it was very likely that we would hold above the EMA 20, and we did. But I was hoping and expecting that we could break up and start heading towards 585 and perhaps 590. 590 this week is no longer on the table. That's going to be really unlikely. There's a chance, a small chance, that we could still hit that 585, which has become an important resistance level in the market. But for now, today, all we really did was chop sideways. We moved along this VWAP for most of the day. We did separate from that VWAP quite a bit to come down and touch the EMA 20 and bounce off of it. So we are above yesterday's close. Let's take that into context and see that on a daily candle bar chart and see what that looks like. So now we can see that we came and touched that EMA 20 twice to both days, today and yesterday. Our close is below that EMA 8 though, and today the high did not poke above it. So we see this little bit of curving down with the EMA 8. We see the EMA 20 starting to curve a little bit, and if we were to draw this with very short-term trend lines, you can see that it looks like this, and perhaps maybe we will bounce a little bit over here. We will see. Tomorrow will tell. I'm sure that EMA 20 will become an important level once again in the markets tomorrow. And if we break down from there, or more importantly, if we break down from this liquidity right here, then we will start to see some bullishness come into the market, or sorry, not bullishness, bearishness come into the markets. So one thing I can do is I can throw a general volume profile, and you can see that it's matching that level that I just showed you as well. And a little bit right here at the EMA 20, but more, it's a little bit below that. So what we really want to see is this market holding strength and moving upwards. However, there are signs in the overall market that are favoring more towards the downside than the upside. Well, also in the Telegram channel, I mentioned the MOVE index, and this is the bond volatility. It's the equivalent of the VIX. VIX is the S&P 500 volatility. MOVE is the bond market volatility. You can see VIX is still at this elevated level, 19.18, but we haven't broken 20. If we see the MOVE index start breaking down, that's not going to be I'm sorry, if we see the MOVE index continue to stay up here, that's not going to be very good for the stock markets. Volatility in the bond markets is a lot more fear than volatility in the stock markets, because bonds are supposed to be safe. Bonds are supposed to be steady. They're supposed to be reliable. And when you start to see volatility in bonds, that is indicating a lot of uncertainty coming into the bond market. And that is reflected by this huge downward movement in the treasuries. Yields are going up, the treasuries are going way down. As long as this continues, if this continues to break down, that's going to be very bad news. That's already quite a bit of divergence that we've seen between the bond and the stock markets. Now, normally, or it's not, I shouldn't say normally, sometimes in the right conditions, that can be very bullish. Money is leaving a safe haven like TLT and going into stocks. In that case, that would be a bullish case for the markets. But that's not why money is leaving the treasury markets. We're not seeing that associated move upwards in the S&P 500. Yes, we are near the all-time highs, but it is not we're not seeing a huge move upwards associated with that huge move downwards. Ever since we had the rate decision, we moved up a baby amount, very passively, very just mildly since the rate cut announcement in September. But we see that in the bond markets, the long bonds have just been falling off a cliff. They've just been going pretty much straight down went right through that MA200 and continued to move downwards. So that's very different behavior. Money is not leaving treasuries in order to go into stocks. Money is just leaving treasuries. They are not showing confidence in the proper management of interest rates. Or another way of saying that is the lowering of interest rates. The Fed has control of the Fed funds rate, basically the overnight rate. They don't have direct control over any other rate. They're hoping that the bond market will react to what they do and move accordingly. But the bond market is reacting in the exact opposite of the way that they would have hoped. And that is not great. So basically that's showing a lack of confidence in the bond market. So that move index is indicating to us that there's elevated risk that we may be headed lower and probably for a pullback. This MA50 has come up so much now that we're actually pretty close. So a pullback to the MA50 probably isn't going to be that significant. Let's take a look right now. That would be a 3% move, 3.5% move. That's not quite what we're looking for in a pullback. So we may be going down to this MA100. So that's more like a 5% move. And that's what happened over here back in September as well. We moved upwards, we pulled back to MA100, and then we were just fine. So we'll just have to see how much weakness comes into the market. If it does come into market, the next few days are going to be fairly critical in determining that. If this EMA20 holds, if this liquidity pocket over here that I talked about earlier, let's draw it over here. I'll call it, oops, that's a little too, let's do it right here. There we go. Okay, so if we break down below this, so basically if we come down to the MA50 and break below it, then we know that we made it through, we went below that liquidity pocket. It just happens to coincide with the MA50. That was totally by coincidence. So if we break down through there, then there's a good chance that we'll hit that MA100 for 5% move downwards. And it's even possible that we could revisit or attempt to visit, I should say, because we never hit the MA200. It is possible that we could hit that MA200, and then we'll have the second correction in the markets this year. I don't think that's going to happen, and it's not super likely. And it's not super likely because we still have elections coming up. That's a lot of uncertainty. The market is unlikely to make huge moves before those elections results are actually announced, unless there's just giant turmoil in the country or in the world. And we have conflict in the world, but it's not huge turmoil yet. So for now, it doesn't seem like that's a super huge possibility. The expectation is that we can move down into this green box somewhere. It could stop anywhere within that green box or just bounce off the top of it, which would be very similar to the level as this EMA20, in which case then everything is good and we just kind of float upwards. So for now, it just doesn't, same as before, same as every day that I've been saying all this week, 600 is looking like the max that we might possibly hit before the election. And even if we get there before the election and we react positively to the election, we're not expecting, or at least I'm not expecting, a huge runaway end of the year. Therefore, I think the huge movements upwards like this that we saw at the beginning of the year, that's pretty much over. If we do move upwards from here, it will be much more mild. That's just my opinion. I can't say for sure that that will happen, but that's what it's looking like to me at this moment in time. So tomorrow, what can we expect? We're probably, the most likely is that we come and we are squeezed in between these two levels, this EMA8 and the EMA20, and we break out either to downside or to the upside. Let's take a look at that gamma structure. Yeah, it's very hard to, it's very hard to determine right now, but we can see that we have that 580 gamma pocket. That's the biggest one to the, actually there's 585 might be a little hot, yeah, just a tad bit higher, but that's a little far away. So like I said, tomorrow we're probably maxed out at 585, but it would be a little surprising if we actually got there. 580 is going to act as a bit of a resistance, and then 570 is a little too far away. So we're really looking at somewhere between 575 and 580. And tomorrow's gamma levels, especially the 0DTE gamma levels, will show us a better picture or a better estimate of that, maybe even a tighter or more narrow range. But for now, I'm expecting 575 to 585, with a probably a little bit of difficulty getting above that 580. So the EMA 8 is at 580.47. That's relatively close to that 580 level. So we're just going to call it the EMA 8, a little bit more conservative, give ourselves a little bit more wiggle room. So if it can overcome that, EMA 8, then we've got some room to go with the possibility of maybe 585. But again, that is, at this point in time, there's resistance to get through. So it's just a little bit less likely for that to happen. So the EMA 20 at 576.78, we were seeing the gamma pocket at 575 and at 570. Okay, so 575, then 570. So right now we're just realistically looking at 575 to 580. And then if the market chooses a direction tomorrow rather than chopping sideways, then we might see 570 or 585. That's the move we're expecting. Of course, it could be very different. The other thing to note here is that we have a positive gamma now. We were negative gamma yesterday, now we're positive gamma. That just favors us moving upwards a little bit. But again, there's this resistance right here at 580. But if we can get over that, then 585 might be possible. But these gammas in here in between, they might really catch some attention intraday tomorrow as well. So that could negate that 585 level. So we're just leaning towards bullishness tomorrow. Maybe a bounce off of that EMA 20. We thought we got the bounce yesterday. We didn't. We just kind of chopped sideways and are still stuck between the EMA 8 and EMA 20. But tomorrow, if we can break above that, then we could possibly hit 585. Okay, so that is it for today. I will see you guys tomorrow.